Hey, it's Mark from Caliber. It is Monday. Happy President's Day. I hope everyone had a great Valentine's Day last Friday. And you got a chance to spend some time with whoever it is that was your Valentine or Valentines in your family, and that you had a great weekend. So today is Monday, as I said, President's Day, and the markets are closed. So any rates that we talk about will be based on Friday's close. Most lenders will just not even reprice, not even send out a rate sheet today. And if they do, it'll be identical to what they sent out on Friday. So what we're looking at is Friday's chart. We ended up just a smidge higher than where we opened as far as pricing, bond pricing. So rates really didn't do much of anything. So let's take a look at last week. And you see that on Tuesday, the pricing dropped kind of off a cliff a little bit, and so which put upward pressure on rates, and then kind of was stagnant for the rest of the week. So overall, rates, there's a little bit of upward pressure on rates last week with pricing, although rates by and large, depending on credit scores and product and type of home and whatnot, they stayed pretty much the same all week. So over the last month, we still have an upward trend, although we certainly leveled off probably since February 4th. We had this spike. We've been pretty much in this range for a while now, so a couple weeks. So we'll have to wait and see. Part of this, we didn't see the big jump. I talked about this last week. I didn't see the big jump or the big drop in rates. Based on the virus. I thought that with the stock market moving all over the place, we would have seen a bigger impact on mortgage rates. You know, when the stock market drops 400 points, these days it's not a very big percentage, but it's still a lot of money flowing out of the stock market, and typically it's got to go somewhere. So it either goes into bonds or in cash. So what's been happening with the big drops in the stock market, it's been going in government bonds. So government bonds have really taken advantage of the fact that all this money is flowing out of the stock market from time to time, and not much is really going on as far as the mortgage-backed securities. So moving forward, we've got the producer price index on Wednesday. Of course, there's no reports today. The housing starts on Wednesday. That's always a big deal. And the weekly jobless claims come out on Thursday. We expect weekly jobless claims to come out about 203,000. Again, so if the number is a lot higher, that's bad for Main Street and good for rates. If it comes in a lot lower, that's good for Main Street and bad for rates. Whatever is good for Main Street is considered inflationary. Bondholders will try to raise the rate and the return if they think there's going to be future inflation. Other than that, should be a fairly quiet week. Of course, the virus news is still going to be on the top. There is news that some of the European countries, their economies are coming. Germany was flat, and Japan had a 6% drop. So there is some slowing in the world economies. So that will have an impact on our stock markets and probably our bond markets. So we'll keep an eye on that during the week. But rates are still really close to an all-time low. So if you're thinking about buying, it's still a great time to get out there. Home prices are going to go up. Spring has come early. There are a ton of buyers out there and not as many houses as there are buyers, which is pushing prices up already. So take advantage of the early housing market. Let's get a house and let's start building your equity. And if you're thinking about refinancing, now's a great time to pull the trigger. Give me a call at 248-705-8431. You have a great day.